we have the Malley presentation. Oh, sorry, I forgot.
What's first? Oh, me?
Public comment, sorry. I'm skipping ahead. It's because Mr. Kraus is rushing me today. He's in a hurry.
I'm gonna save it for later.
Somebody's gotta be timekeeper.
I never go over 3 minutes. What are you thinking about?
He's thinking about Megan.
No, I'm not gonna say anything today.
Right
Right
no
now.
comment?
Not right now.
Okay.
Not right
Change
now.
your mind.
I don't see any other comments? All right. Okay. See, I already knew that, which is why we could just move right to the
Sorry for questioning. Okay, so Amanda's here from Malley tonight, and she would like to present the June 30th, 2018 audit to you. She has a handout, has Malley on the top of everyone's seats, and also you were attached to your board docs. They came out at the end of last week. We had attached the draft entire report, so hopefully if you had any chance to look at that and have any questions on that, now's your opportunity to have your auditor in front of you and to ask her what you would like to know. So, Amanda, it's your floor.
Thank you.
Is she not going over there?
No.
Happy to be here tonight to present the audited financial statements for June 30, 2018. I like to always start by saying we have full cooperation from the staff. No issues, no modifications to the scope of our audit procedures. Everything for fieldwork went smooth and great. The first page of the summarized presentation is just our agenda. We're going to talk about the required communications under Statement of Audit Standard 114, talk a little bit about our audit scope and the timing, and then the financial results. So our required communications, first of all, we're issuing an unmodified audit opinion on the financial statements. That's a clean opinion, meaning we haven't identified any material misstatements in the numbers. We've been auditing the school district for 14 years now, and we're happy to say we've always issued a clean opinion in that time frame. In addition, we've performed what we call the single audit. That is the audit we do on the federal grant programs. So the federal government has charged the school district with hiring an audit firm to audit the federal programs. We're able to rotate what programs we test based on some dollar thresholds and what programs are most significant. So generally, the two programs we hit on a rotating basis is the food nutrition program and the IDEA program. So the IDEA program is the one we tested this year. And again, it's an unmodified opinion. We found no issues in non-compliance or with your controls over your federal programs.
What does that stand for?
What?
IDEA?
IDEA?
Yes, ma'am.
It's a state term. Do you know the?
Individual
Individuals with Disabilities
Education Act.
Yeah.
That sounds correct. And then the last report we present is referred to as the SAS 114, which is from the auditing standards. It's just required communication to the audit committee or the board, and it talks about, we basically say we didn't have any disagreements. We mentioned that there was an implementation of a new accounting policy this year, which I will go into when we talk about the numbers, and just some other items for the board's knowledge, and really there's nothing in there to report. And we are not presenting a management letter, meaning we don't have any internal control deficiencies to report, so everything's good in that regard as well. As far as our audit scope and timing on the next page, we always start with the trial balance and obtain the supporting account analysis, and all of that was received in a timely manner. We reviewed the district's internal control system and performed what we call walkthroughs, which was looking at least one example of each type of transaction to make sure the controls are implemented as we were told they were implemented. We have no material audit adjustments. There are some adjustments attached to the SAS 114 letter. They were all proposed by the district, or they were for items like OPEB or pension on the food service fund, which are adjustments that we generally make on the school district's behalf. When we test cash and investments, our focus is on the bank reconciliations. We also look to make sure the investments are the kind allowed under state code, and to make sure you have Act 72 collateral securing your deposits. For capital assets, we look at the material, the larger asset additions during the year. We look at the invoices and make sure that those are properly capitalized. We also review depreciation expense on a sample basis. For accounts payable, we focus our attention to make sure accounts payable is complete, meaning we're looking at all the disbursements after year end through the date of our fieldwork and making sure that those expenses are recorded in the proper school year. So if they were for costs incurred in the month of June, we make sure that they were recorded in the 17-18 fiscal year. For the long-term debt, we focus our attention on there by confirming the balances with the bank. Revenue, similar, we send confirmation letters out and perform reconciliations. And expenses, we test expenses via pivot tables. We're able to perform a little bit of a disaggregated analysis on the expenses that way. So where a lot of auditing firms will just pick 40 expense transactions to look at, what we do is analyze the accounts first. It allows us to focus on maybe, let's say, the month of December for a certain repair and maintenance account is higher than all of the rest, so we'll pick something in that month. So we're testing the same amount, but we're able to focus that attention on areas that look strange or unusual rather than just picking a random 40 transactions. And the ability to do that is a lot based on our use of data extraction, which is the next item. And we have a list of different tests we perform using our data extraction software. The benefit of the data extraction is generally that we're able to test more transactions, again, versus sampling and just pulling 40. We're able to look at a lot larger data sets using our software. So some of the key items there, we do perform a payroll analysis. We're looking at the W-2s, making sure nobody was paid significantly more than, let's say, their job title would say they would be entitled to, or that there weren't big swings in the wages from one year to the next, or if there were, we obtain the explanation why. We perform our journal entry testing using data extraction, and also we look at the employees, whether there's any duplicate direct deposit accounts would be a good example, looking for nepotism and potential conflicts of interest. Getting to the numbers themselves on the next page, letter A, the first section, is your government-wide financial statements. This is the set of financial statements that the intention is to look at the district almost like you would look at a for-profit company. It's the full accrual basis of accounting, meaning your long-term debt is reflected, your fixed assets are reflected, and all of the other long-term type transactions that aren't necessarily reflected at the fund level, which is how you review your financial information throughout the year. So the main items to highlight, your cash and investments at the end of the year ended at $60,828,000. That's up about $3 million from the year before. Your capital assets overall represent $154 million, and it's important to note there, you are about halfway through the useful life of your building on average, and that's everything put together. So it's good to see if we get too far along the life of those buildings, we know that you're going to have some significant repairs and improvements coming up. If it's not very depreciated, then we know everything's new. So right now you're right in the middle on average. Accounts payable, $15 million. That's consistent with the year before. Your long-term bonds payable and lease obligations is $92 million. The two items under liabilities that we should spend some time on are the last two, other post-employment benefits and the net pension liability. This represents $250 million or so of your liabilities. It is not bonded debt that is going to require payments. It is a liability that's recorded based on evaluation for costs that you would incur if the theory is if everybody were to leave tomorrow, how much would you pay out in pension and healthcare costs to your retirees? So when we look at that liability, it's not something you're going to have to turn around tomorrow and pay, but it's required to be booked on the GAAP basis of accounting to reflect that full accrual liability. The pension has been around. If you look at that net pension liability line, you can see the big jump of almost 180 million back in 2015. That was when the new pronouncement for pension was adopted. Similarly, this year, we've adopted another standard for the other post-employment benefits that required the same thing. PSERS provided a liability number for your portion of the overall state OPEB costs, and also Penridge has its own single employer OPEB plan that obtained evaluation and was recorded as a liability. So you always showed a liability of 5.6 million under the old method. This method encompassed a full valuation, so it was a different way of looking at the number, thus the large increase in the balance. So it went up to $17.8 million this year. And your net position, which is the difference between the assets and the liabilities at the end of 2018, was a negative $91 million. And again, that's really because of this $250 million of OPEB and pension costs that have been recorded over the past couple of years.
I just add with the OPEB change, it's not that the board did anything differently as far as offering any additional benefits to employees. It is just the accounting method of determining that.
Yep.
Right.
The pronouncement's been out for a couple of years, and they picked June 30, 2018 for the year that these liabilities will be booked. You're in the same boat as every other school district, every other government agency. They're all still getting used to their pension number, and now looking at another big number on their balance sheet.
Is it additional things that were added into the calculation, or is it just a different way of calculating?
A different
the
way of
liability?
calculating it.
Okay.
Yeah. It's taking into account healthcare cost trends and whether somebody's going to stay married for a certain number of years, and that spouse would need to be covered. So there's a lot of it's an actuarial valuation. A lot of things go into it. The next section, your statement of activities, is your revenues and expenses, again on that full accrual government-wide basis. A couple changes to highlight. Your property taxes are up a little bit. There was a small increase in the millage rate during the year. Your other taxes, which is mostly your EIT and transfer taxes, remained fairly consistent, as did your grant revenue. Both are up just a little bit. Your investment earnings, the market did a lot better this year. So you can see it's 900 grand compared to only 300 the prior year, so that was good. And expenses likewise increased along with the revenues. There you're looking at, everything from increased salary costs and healthcare costs, the pension rate increased. So overall, you're looking at a change in net position of $2.3 million. The next section goes over the governmental funds, in particular the general fund. We've highlighted some balances, mostly the fund balances there. In total, you have $16.5 million in fund balance in the general fund. 9.3 of that is unassigned. So your unassigned is about 7% of your annual expenditures, which is right about where you want to be. And we're showing net change in fund balance of 0 in the general fund, and that's because the surplus of $3.9 million is being transferred to the capital projects fund. On the food service fund, we're going to see some negative numbers here as well. The pension and the OPEB, because you have wages in your food department, a portion of those liabilities gets allocated to the food service fund. So likewise, their net position reflects a negative starting in 2015 when the pension standard was implemented, and that net position grew even more in the negative this year as we added some OPEB. Overall, the change in net position for the year was a loss of about $42,000. There's a hefty amount of depreciation in there and some other non-cash items. And lastly, the budget versus actual. We're not actually presenting the numbers. It's in the financial statement, page 63, if you wanted to take a look. Overall, what we're seeing is that total revenues came in over budget by about $2.4 million. Most of that was higher collections in your real estate taxes than expected, and some of those other tax areas on the local sources. On the expenditure side, your actual came in $1.8 million below the budget, and that would just be due to slightly lower salaries and other costs than what was expected. Are there any questions on the numbers?
Could you repeat what you just said? I didn't hear the revenue change.
The revenue change was $2.4 million higher than the budget, and the expenditures was $1.8 million lower than the budget. We've provided the whole financial statements. It did grow quite a bit this year, 10 pages longer thanks to the OPEB. A lot of disclosures that describe the whole valuation method.
Does anyone have any questions or anything that you'd like Amanda to dive into any deeper, or anything you'd like to explain further?
So the difference between what was budgeted and what came in was basically that $3.9 million that ended up getting transferred to the capital funds, correct? Is that what-
Yeah, overall you budgeted for a deficiency of about $300,000. So yes, that surplus is pretty much the overage.
Do you guys have any questions? All right, I think we're ready to start.
When will we see the paper copy?
Next week.
Next week.
Yep.
We'll have an electronic copy that we'll put on your library and board docs. We'll also have a number of the bound copies. I know, Doctor, you like to have a bound copy. Anybody else wants a bound copy? Be
I'm
happy
old
to-
and I'm a paper person.
No
What can I
problem.
say, right?
No problem. I'd be happy to, provide a paper copy, but we'll make sure that when we have it, that you'll have your final copy electronically. We put it on the board docs. Jackie will put it in the library, and Doctor and I'll get paper copy.
And the documents that we're going over tonight were all public view, right? So the public could view those before tonight too, right?
Yeah.
Yes.
Yeah.
Mhm. Yeah.
I'm logged in, so it's hard to know if other people can see it too.
Yeah. Right. Yep.
Perfect, thank
So, but the one that is on there tonight is marked draft.
you. Right.
Because Amanda had to come tonight and do this before she makes it a final copy.
Mhm.
Is that fair enough?
Yeah, yep. Yeah, the idea is we get board approval and then in the signed letter,
Right.
normally I take that back and then we just process from there.
Okay.
So the signed letter she's talking about is the management letter that Dr. Boltman and I signed saying that we followed all the procedures and
They told us the truth,
Gave
all
you-
that good stuff.
so.
Under oath and.
Under a
Yeah.
sworn, yes.
Make him sign his life away.
So. Okay,
Thank
thank you
you.
so
Can
much.
I
Thank you
ask
very
a
much.
question or two before she leaves?
Do you?
I'd hate to make her stay.
Well, that's the whole point.
Yeah, you can, yeah. Well,
Can you describe, you gave us a clean bill of health, which I'm happy about, on internal control. Can you tell me what internal control items specifically were reviewed?
I
And
don't know
I'm
how-
I'm particularly concerned about cash.
Okay, for internal controls on cash, we review an example bank reconciliation. That's a big item, and we make sure they're following their procedures for the reconciliations. And with most of the accounts pooled, that's generally just one big account, so. That would be the main control over your cash balances. As far as the ins and the outs, On the cash receipt side, we again look at one transaction and make sure it's implemented as we're told. Disbursements, same idea. And then when we test the expenditures, we also look for the approvals. Does that answer your question?
What about handling cash?
Handling cash?
Yes.
You mean like the athletics and some of the smaller items?
Yeah, I mean, if we have 5,000 people up here, well, we won't have 5,000. Let's say we have 2,000 times $5 a head paying customers, that's 10 grand.
I can tell you specifically to the athletics fund, we do review at least one event for the year. We make sure they're tallying the tickets and reconciling those to what's deposited.
And can you tell me what event was?
I don't have the record in front of me.
Okay. Thank you.
All right, thank you very much.
Thank you.
Appreciate your time. All right, we're gonna move on to contracts for approval. Mr. Palmer, go ahead.
All right, first contract is Learn Well, and this is a educational services contract for a student in a medical facility. As you know, when students placed in a medical facility, the district is responsible to provide the education to the students. So the cost there is $45.50 an hour. The next two at Kids Peace are the same situation, students that are in a medical facility, and we are responsible for payment for the education of the child when they're in that facility. D is a student that is placed for in emotional and educational services. This student has been placed in this same situation since October of 2017, so this is the contract for the new year. E is another student that needs to be placed for the same type of issues, and this contract is to add a one-to-one aid to support the student in order to help the student through his or her severe issues. F is an additional 25 people to the ALICE training website, so we have to pay per student or per employee for those to have access for those ALICE training. G is an MOU for us to begin a Special Olympics program here at the high school, which is very exciting. The high school administration and Dave Babb have been working on this for quite some time, and it's nice to be able to say that we're going to have this program and have something for those kiddos and have a program. So that's pretty cool. And really there's very little cost to us as far as outgoing. It's our time, our effort, things like that, our administrative time, so it's, and I think it's something that everyone's been very happy to work on. H is Bucks County IU. This is the truancy services agreement. Remember we had this last year, and it's services that the IU is providing to the districts on an as-needed basis. So we put the contract in place, then if we ever have a situation that our truancy folks can't handle or need help with, we have additional services at the IU that we can call in, but we only will use them as needed. And